Welcome to TheoTRADE. This is Don Kaufman. It's June 26th, 2024. We are just seconds after the cash close here on this Wednesday afternoon. The S&P futures, little volatility into the cash close, but for the most part finishes massively unchanged. I'm thinking maybe tech has kind of lost its mojo. Let me actually show you exactly what I'm talking about here. Of course, in this evening's update, as I was saying just moments ago, that people is some volatility into the cash close. So the S&P futures, they were ripping into the close, and literally seconds left, boom, they dropped them like a rock. So a little bit of volatility, and I'll tell you what, that volatility in a big way came out of NVIDIA, but the bid back under NVIDIA, it's just not enough to actually drive markets. And, whatever, NVIDIA finishes up 31 cents, right? It's massively unchanged. But take a look. Amazon, okay, a ripping day. I mean, people, this is a 4% move up in Amazon. What did the NASDAQ do? Absolutely nothing. Take a look at Apple. Up some 2%. It's not enough to even sustain the NASDAQ futures to be positive. I'm telling you, tech may have completely lost its mojo because the only real driver was NVIDIA. But I'm going to tell you something interesting. NVIDIA was flying in yesterday's trading session. And yeah, the S&Ps finished higher, but it was mildly so. This is something you've really got to keep an eye on because, again, NVIDIA, this is what got us here. I mean, NVIDIA, let's put it on a year-to-date percentage. NVIDIA is still up 162% on a year-to-date basis. Throw maybe a side order of Meta in there, right? Because you're going to, oh, Meta's up big too. Yeah, Meta's up about 48%. Oh, but what about Apple? Apple really is not exactly the, the big tamale in here. It's up about 15%, which is pretty much in line with the S&P 500, which is up 15%. So there's just no question that NVIDIA got us here. But NVIDIA, from this point forward, it doesn't appear to have the capacity anymore to be the driving force. That sell side activity definitely took some of the juice, some of the mojo, as I was saying, out of the underlying. And this two-sided trade that we're starting to see in NVIDIA, okay, is starting to resonate through the entire marketplace. Next couple of days in here, they are going to be critical. And I'm going to tell you exactly why. You start looking into NVIDIA, and I pull up the option chain specific to NVIDIA, and I'm going to come down here to today's option statistics. NVIDIA is still rocking. Like, all right, it's still doing, 4.6 million option contracts traded. And that sounds like a huge amount. Then you realize the sizzle index next to it says 0.68. You know what that basically means? Contract size is actually dropping. It's dropping and dropping substantially. What the sizzle index happens to be, it's today's option volume versus the previous 5 trading sessions. So when it says, 68, that's 68%, okay, of what it has done over the previous 5 trading sessions. All right. So we're looking at this, we're like, it's a lot of size, but it's actually negligible size in comparison to what we've seen. As I said, there's a lot going on in this marketplace, and tech looks like it's running out of some juice to some degree. That options market is what drives NVIDIA. Now, I can't tell you, are the call buyers going to come rushing back in tomorrow? You can't necessarily distinctly say that. You can definitely say it didn't happen today. That's why there's relatively low volume on the option side of things, right? And these are aspects you want to look for. The other thing, again, that's a really big one to me is when you start looking at stuff like Apple, and Apple's up 2% and can't carry the NASDAQ, and Amazon's up a tune of almost 4%, okay, and does 1.5 million contracts, and it's 2.5 times its normal daily option volume. And it can't carry the NASDAQ. Tesla, I know Tesla right now is It's not even one of the magnificent anything anymore. There's nothing magnificent about its market cap, but it does, and it's good for almost 3 million option contracts, up almost 5%, and it can't carry the NASDAQ. Those are the aspects you got to look for, right? This is a changing kind of the guard. Tech, okay, losing its ability to actually drive, even with this huge market capitalization. It's NVIDIA or it's nothing. And you better keep that in mind moving forward. All right, next on the docket here, got to take a look at the bond market, right? Big movement inside of the bond market, specifically, okay, today. Big sell side activity in the bond market. Now, normally I would give you 5 different reasons, for the bond market. Wipe all of that away. All we know at this point, the remainder of this trading week, which is just going to include Thursday and Friday, and of course next week is going to be a holiday week of trade. There's actually a lot of data coming out. In fact, I'm going to cruise over to the calendar and just bring up, of course, Thursday. I know everybody's worried about Friday. There's a PCE, okay, number coming out, which is the Fed's indicator of choice. But before you get there, tomorrow you got durable goods, okay, little retail inventory, some jobless claims. Look, there's a lot, okay, on the docket over there. Again, wholesale inventories. Ooh, there's quite a bit that can rock this bond market. And I'm paying attention to it because this is the first major break of what's been an incredibly tight channel in recent trade. For those of you that are a little, shy of bonds, the bond selling off is indicative of interest rates going higher. The only question at this point is not so much why the bonds move down, okay, but what are the implications if some of the data tomorrow comes out what we would term hot? Okay, have like, for instance, PCE data coming in a little bit hot. That is, inflation's not dead. Bonds are already selling off. The only question is, the bonds actually see something that we don't right now. Forget about whatever you think about, different currencies and so forth. You're also seeing the dollar rally. I can give you a lot of reasons for the dollar rally. One of them is the yen getting absolutely kind of annihilated. Okay, but again, I'm pushing that aside for right now. I believe this may be a little bit of a duck and cover kind of trade. And you got to be careful because the bond market, okay, did this trade, right, down, a 0.8 ticks, and it did it on some pretty good size. It's almost, again, preemptive inside of the bond market. Be careful inside of the prints tomorrow morning. Obviously, as I just showed you, wholesale inventories, okay, some of the data actually coming out. Obviously, the PCE data that's coming out on Friday. This could be a little bit of a prelude to volatility to the marketplace. That coupled with the fact that, again, if those bonds continue to stage some sell-side activity, that is not going to be good for broader markets. That is specifically not going to be good for tech. Onward from there, as I was actually saying, the dollar continues to rip. We're very, very close to the big strategic breakout above 106.5. That's something, again, data could take us there. So if you will, some stars have kind of aligned over here. The bond started to see some sell side activity. The dollar is actually trading a little bit higher. I don't see any sign of volatility coming into this marketplace. Like the VIX, it's dead. Volatility futures are dead. I'm looking towards the bottom of the screen. VVIX is totally dead. And the 9-day volatility, it's dead by dead. Okay. Meanwhile, we are still seeing some sell-side activity inside of the crypto marketplace. Again, possibly you would think maybe defensive posturing. Again, buying dollar, selling some crypto over here, selling some bonds. We're all over the place right now. Okay, so there's an aspect that I would look towards specifically to answer the question. Maybe what we can kind of expect, if you will, with the remainder of this week. Because all we've done at this point, okay, the S&Ps are closing where? For the most part, massively unchanged on the week. Now, this week had about a $65 expected move, just shy of a $65 expected move. So you're looking for the 65-point move, and that 65-point move higher, 65-point move lower. Actual move right now, okay, nominal. What's, 10, 15 points amongst friends, okay? Trade right now, it's moving, it's listless, right? I mean, literally, if you take a look at the marketplace, this line across your screen, that's where the week started. That's basically where we closed today. As I said, what's, 10, 15 points? I mean, we started the week at 54.65. Today's SPX cash close is 54.77. It's unchanged. It's a nominal move. What can you expect for Thursday? What can you expect into Friday? Well, the answer there is always going to be found, of course, in expected moves. These are going to be well worth looking at. So tomorrow, okay, we're looking at about a $23, $24 expected move into Friday, okay, which is also end of quarter, is about a $38 expected move. But I'm going to stop right there and simply say this. Based on some of the price action that I'm seeing in the bond market, based on the price action I'm seeing in the dollar, the tech, okay, it's getting sloppy. It's all over the place. I'm going to take the over on these expected moves, okay? No implication. I'm telling you right now, $38 between now and Friday's close, it doesn't look like enough. I think you should strap in and get ready for some volatility. I mean, after all, the expected move on this week, the expected move this week is $65. You're going to tell me there's only $38 of movement packed into that? Yeah, no, I am a buyer of options, okay, for the next 2 days in this marketplace. These short duration options could actually lead us to some decent degrees of profitability. Thanks everybody again for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.